Mswati inkosi ithula akayithathe akahambe nayo akayithathe yotenza bakhe
1400 hours. A very good afternoon to you. You're watching ERS Text Talk here on Eswatini TV. A very good afternoon to you. The ERS Text Talk is proudly brought to you by the Eswatini Revenue Service, and I'm your host, Sifiso Malo. Coming up on the program today, we look at the Sondzela Sikhulume program. It is an initiative that encourages taxpayers with outstanding tax debts to engage with the Eswatini Revenue Service, as well as to regularize their tax affairs before enforcement action becomes necessary. That is very important. We're going to unpack what the program means for taxpayers, which is yourself, and how it works, and why engaging with the Revenue Service early can make a difference for you. But before all of that, let's look at our business news today. All right, in our first story today, the country's reserves are under strain, and the governor of the Central Bank of Eswatini, Dr. Sikhulume, says measures are being taken to ensure that the reserves are safeguarded. The governor was speaking during the Eswatini Financial Markets Forum at the Central Bank of Eswatini complex at Eswatini. It is held under the theme Safeguarding Eswatini's Reserves for a Sustainable Future. The latest monthly statistical release for June and July from the Central Bank states that the reserves increased by 23.1% month-on-month, but declined by 16.7% year-on-year to 10 billion emalangeni in June this year. Now, the month-on-month growth in reserves was mainly driven by the quarterly inflow of Southern African Customs Union SACU revenue.
The level of reserves are under extreme pressure. Because, you know, when you've got quite a sizable chunk of reserves, you can place them to various assets and optimize return whilst also ensuring safety. So we are currently under strain and pressure from the level of reserves, and hence we are doing various initiatives to bolster the level of reserves. And this is as a result of largely outflows, cash flow challenges by government. And you will find that government even has to trigger certain provisions that allow government to tap onto the central bank by providing an advance. And when that advance is taken up and there are outflows, that brings down the reserves and we face a lot of pressure. And of course, the whole geopolitical issues are the main worries and the main concerns that we focus on. We need to all work as a country and drive or encourage an export-driven economy so that our reserves flows are growing through trade, because that's the better base to grow your reserves. And of course, you have got some natural resources. That's what we are trying to explore now. You know, with gold, we have got endowed with gold as a country. So we are also exploring those opportunities, how we can bolster our reserves by engaging, not necessarily part of the mining aspect, but part of the off-taker of the gold. And all this is aimed to bolstering the reserves.
The Chief Executive of Crown Agents Investment Management says reserves are an anchor of the nation and should be protected at all costs. He emphasizes the importance of prudent investments, focusing on sound investment decisions and strong returns.
When you have a situation of two different asset classes that might have the same risk, but one has more return, as a prudent investor, one would choose the higher returning one. And so that's why it's important with governance and policy, and think through strategic asset allocations and think through what the market is providing at given any moment in time.
Senior Financial Officer and Engagement Manager at the World Bank Treasury shares what she believes is important when dealing with reserves, in addition to safety, accessibility and liquidity, as well as ensuring effective investment of reserves, as mentioned by the Governor of the Central Bank of Eswatini, Dr. Sikhulume.
The priority can differ between different portfolios within the same central bank, that you have different tranches. So in some tranches, safety is the number one, but then some other return actually has a more important meaning. And that is down to the individual organization to make this prioritization.
As the Eswatini Financial Markets Forum continues, one message has come through clearly from speakers and panelists. Preserving the country's reserves requires prudent investment, strong risk management, safety, liquidity, and accessibility, while ensuring that reserves are managed responsibly for the long-term benefit of the nation. The discussions have also highlighted the importance of striking the right balance between protecting the country's reserves and ensuring they generate sustainable returns. Reporting, Nelson Ngamandla, Vuminkosi Nzinisa, Ezulwini.
Still at the inaugural Eswatini Financial Markets Forum launch, the Central Bank of Eswatini has announced that it will introduce retail bonds in the near future in an effort to boost financial inclusion, playing a part in widening access as well as opening up financial inclusion, even for small and medium enterprises. Now, the governor shared this when he highlighted strategic priorities that should shape the next phase of Eswatini's financial system development.
Deepen and modernize financial markets. We must continue building domestic money and capital markets that are more active, more efficient, and more supportive of investment and public financing. The bank already plays a role in government securities issuances, debt origination support, liquidity operations, and collaboration with stakeholders to deepen local markets. That role should continue to evolve as part of a broader market development agenda. Innovation must be embraced, but with discipline. Payment modernization, fintech development, digital public infrastructure, and regulatory experimentation all matter. But innovation must remain anchored in trust, consumer protection, stability, and policy coherence. We need to strengthen inclusion with purpose. We must move beyond access alone and focus on whether finance is helping individuals and firms participate more productively in the economy. That means improving the quality of intermediation, widening opportunity for small, medium enterprises, and ensuring that financial system supports enterprise, savings, investment, and resilience at household level. I am particularly thrilled by this initiative because I got confirmation on Tuesday when we had our exco that in the immediate and very near future, we shall be rolling out retail bonds, which will ensure that there is active participation to the wider population of eMaswati in terms of trusted and reliable investment assets. We need to invest in institutional capability. No financial system can outperform the institution that sustain it.
Eswatini recorded a preliminary merchandise trade balance deficit, which is exports less than imports, of 232.68 million emalangeni in July this year. Merchandise exports of 3.72 billion emalangeni and imports of 3.96 billion emalangeni, and that is inclusive of trade with Southern African Customs Union, SACU, countries like Botswana, Lesotho, Namibia, and South Africa. Now, this is according to the recently released Eswatini Revenue Services merchandise trade statistics for this July year.
The report states that the fiscal year-to-year date, which is April to July preliminary merchandise trade deficit, was 1.05 billion emalangeni in July, an increase from the cumulative trade deficit of 753.65 million emalangeni recorded on the same period the previous year. This can be attributed to the cumulative merchandise exports of 14.38 billion emalangeni, which is plus 5.99% year-on-year, and imports of 15.43 billion emalangeni, which is plus 7.76% year-on-year. On a year-on-year basis, merchandise exports decreased by 81.5 million emalangeni, which is minus 2.13% year-on-year, to 3.72 billion emalangeni in July this year, compared to 3.80 billion emalangeni in July last year, while merchandise imports increased by 145.32 million emalangeni, which is plus 3.81% year-on-year, to 3.96 billion emalangeni, compared to 3.81 billion emalangeni in the same month the previous year. According to the report, the decrease in merchandise trade exports can be attributed to lower exports of concentrates and chewing gum. Meanwhile, the year-on-year increase in merchandise imports in July this year was due to higher imports of petrol and diesel. The report further highlights that compared to the other world zones, Africa is Eswatini's key trade zone, accounting for 95.25%, which is 3.55 billion emalangeni of total merchandise exports, and 72.73%, which is 2.88 billion emalangeni of total merchandise imports in July this year. Reporting, Nelson Langamandla, Mbabane.
All right, that marks the end of our business news. I am in conversation with Nduduzo and Celiwe from the ERS, who are talking all things Sondzela Sikhulume program after the break. Stay with us.
To all the viewers of Eswatini TV in the kingdom and beyond. Eswatini TV is regulated by the Eswatini Communications Commission through the Broadcasting Code and Broadcasting Guidelines. Under these instruments, the station commits to broadcasting information and news that have been fact-checked, programs and content in respectful language with no elements of hate speech, violence or sexual activity. If you hear any unsuitable content on this channel, you have a right to voice your complaints with the station management. Should you not be satisfied with the response or action taken, you can escalate your matter to the Communications Commission at PO Box 7811 Babani. Call 2406 7000 or send an email to info@escom.org.za. For more information, visit www.escom.org.za.
Welcome back to the program. Now let's turn our attention to the Sondzela Sikhulume program, an initiative that is encouraging taxpayers who have outstanding tax debts to come forward to engage with the Eswatini Revenue Service and take steps to regularize their tax affairs before enforcement action becomes necessary. Now, to help us understand the program and what taxpayers need to know, I am joined by Nduduzo Dlamini as well as Celiwe Vilagati. Well, Nduduzo is the Manager of Marketing and Communication, and Celiwe Vilagati is the Director of Compliance, Risk and Strategy from the Eswatini Revenue Service. Thank you so much for joining us, and welcome to the program.
Thank you.
Thank you for having us.
Let me start with you. Maybe the simplest one is, what is the Sondzela Sikhulume program, and why is the ERS encouraging taxpayers now to come forward?
Thanks, Sfiso. Good afternoon to you and the viewers. Thanks for having us once again here to talk anything ERS and tax matters. So the Sondzela Sikhulume is an ongoing campaign. If you do remember, we did come here a couple of weeks back where we were talking about the schedule where we'll be going around the country. So basically, Sondzela Sikhulume is us encouraging our taxpayers to make sure that they're up to date with their payments. So we have seen a spike in terms of tax debt, which has went up. So we are trying to make sure that taxpayers come through, they talk to us, and they start coming into arrangements which will assist them to close those tax debts.
Yeah.
So what we did is that moving forward, we are planning to make sure that I think we took out a public notice last week. So now from the next step, we want to say what happens if you continue, don't come, yet we are opening hands as ERS saying, Sondzela Sikhulume, come, let's regularize your tax affairs.
Yeah, maybe Kaliwe, just to further add onto that, and the question I suppose that is, forwarded to you would be, why is it important for taxpayers to come forward and engage with the ERS as soon as they recognize that I have outstanding tax obligations?
Okay. Thank you, Sfiso. And once again, thank you for having us. Well, Sfiso, it would probably be imperative to explain the situation that the country is facing. So what we're seeing is we're seeing this debt book of about 8.2 billion. And when you look at it, it's VAT, which is basically you buying at a shop and the owner says, oh, I'm going to take 15% to the ERS, and it's going to ERS and it doesn't get there. And then, of course, company income tax, where you will declare your expenses and your profits to the Commissioner General. And the key thing that we believe is should be hammered to all of us is it's not an obligation for some people and then some others don't pay. We all have an obligation to honor. And it becomes so imperative because it levels the tax ground for all of us. And that is why we're actually constantly inviting people to come through to say, hey, if you have a debt, please come through so we can talk to it, because these debts are there, they are escalating, and people need to understand that if they don't pay, we may find ourselves in a situation where we need to employ certain enforcement measures.
Yeah, maybe let's get into those, enforcement measures. What could potentially be that challenge if I have a debt and I do not rectify my tax account?
Well, a number of things can happen. I'd like to say self-inflicted halting and potentially crippling of your business. And the reason I say that is because we will generally reach out, we'll generally teach, educate, handhold, do what's necessary for you to comply. But in an event, we do get there, and it's not necessarily our first option. You will find that you will have these challenges. So I think for today, because of time, I'll just talk to three. So for starters, we have the tax clearance certificate. I'm sure you're aware of it, the TCC. Now, what happens is if somebody doesn't have a clean tax account, you find that they cannot get the TCC. And what that means is that they cannot enjoy the benefits and also, services that are coming with that. Other third-party processes like renew a trading license, renew a liquor license, or even transacting to the bank for certain transactions. Now, in that way, your business operations are automatically affected.
Absolutely.
And then, of course, you may be subjected to, what we call third-party collections. I'm sure that's an interesting one.
Yeah. I want to get into that. I mean, let's really dive into what that party collection really means and what it is, and what circumstances may result in you guys enforcing that.
So third-party collection is basically a statutory debt recovery measure that is available to the ERS. Now, what happens is that the ERS, through the CG, can appoint any entity, really. So it could be like a bank, it could be a licensed fintech company, it can be a mobile wallet service provider, it can be an investment house, or even another company. They will be appointed as a third-party collection agent. And what that means is that if you have a debt fee, so you've got 2 emalangeni debt with ERS, and then we appoint Bank X. And then we say, hey, Bank X, Sfiso has a debt for 2 emalangeni. Please withhold that 2 emalangeni and remit it to the ERS to settle Sfiso's debt. Of course, Fiso is not necessarily left in the dark with the process. You're always informed in what's happening in an event that we do get there.
So it doesn't catch me by surprise.
Never. You will always be informed.
Absolutely. And to
Yeah.
do so, some taxpayers may be concerned, for lack of a better term, when they hear about third-party collection. Is this the first step that, is this the first action, rather, that the ERS, takes when collecting outstanding tax or debt?
Okay, thanks, Fiso. I think Cleo has already touched a bit on it. So we don't usually just jump there. We are going to try call you. We are going to engage you. We are going to make sure we nudge you to say, please come regularize your tax affairs. So it's
way in advance.
Yeah, way in advance. Even through the process, as Cleo has highlighted, when we even go through that, we are still going to notify you that we've been trying to contact you. Now we are moving to this step. Otherwise, in general, it's not something we'd like to do, and we try by all means not to get there. We would prefer that we bantu abasondzela bakhulume nathi as we continue.
Kaliwa, you mentioned that you will cover 3 because of time, but you covered 2 really in that first answer. What is that third one that you want to add?
I do want to add, maybe before I add that, there was a concern that was raised. I do want to just emphasize that with the third-party recovery, it is not facata. It is actually a statutory requirement in line with the income tax order of 1975 and also the VAT Act of 2011. So just to address some of those things where people have had queries that do you have a right as the ERS to actually do that, so that they can at least appreciate that it's part of the law. That is why the CG has been given that. And then when it comes to the last enforcement measure, you may find yourself subjected to other processes that would involve now, the law, where you might find that now your business is being, going through prosecution, and it's generally public. I think you can recall that we see these things in the papers, it attracts media. So even your reputation, gets to be on the line to say, this company, how do they get share? Your partners are now, raising eyebrows and things like that. Or it could be an investigation. We do have a number of them, but I think those are the key ones that I want to just raise today to say, it's very apparent that these processes are lengthy, they are costly, and also they are prone to, high reputational damage. So the only thing we can do to avoid it, Sondzela, we talk, because that means when you come through, we will get to appreciate the challenges your business is facing. We will get to have some type of agreement in terms of, are you doing a down payment of X%? Are you doing a payment arrangement of this much? And if you do a payment arrangement, are you honoring that payment arrangement?
For sure.
But I think the key thing is just, the transparency, so that we do not get to these extreme enforcement measures. We do avoid, like Nduduzo said, we do avoid the middle costs.
Extreme enforcement measures that will be self-inflicted, by the way. Nduduzo, the takeaway message from you, from this discussion.
And thanks. So the key one is to say Sondzela Sikhulume is an ongoing campaign. We've just finished the outreach, but it doesn't mean Sondzela Sikhulume has been closed. Our clients can visit us on any of our service centers. They can call us. They can also WhatsApp us on 76063735 or email us at info@ers.org.za. We are willing to assist them. Abasondzele bakhulume nathi. We are ready to assist them.
Thank you so much to the both of you, Kaliwe and Nduduzo, to my far right there, for sharing very, very important and valuable insights. The message is very clear. If you have outstanding tax debt, approach the ERS and engage through the Sondzela Sikhulume program before enforcement action becomes necessary. And for assistance, contact the Eswatini Revenue Service on 2406-4050 and email them on info@ers.org.za or send a WhatsApp to 76063735. We have Sondzela Sikhulume on standby on our Zoom video link for our Wall Street numbers today. Stay with us.
Attention Attention retailers, importers, clearing agents and customs brokers. All television sets and decoders entering the Kingdom of Eswatini now require mandatory ESTVA authorization before customs clearance. No clearance without valid ESTVA import permit. Don't risk delays at the border. Submit your application 24 to 48 hours before your shipment arrives. We process complete applications in just 1 to 2 working days. Our QR-coded permits make the verification quick and easy. Always double-check your HS codes and quantities for smooth compliance. The process is simple. Step 1. Submit your completed application form. Annex A with product line items for TVs, decoders, and commercial invoice. Step 2. Eswatini TV reviews and approves. Step 3. Make payment and complete verification. Step 4. Receive your permit. Step 5. Clear customs smoothly at the border. Make sure you have all your required documents, a completed application form, Annex A detailing your product line items, commercial invoice, valid TV retailer license, and letter of authority if applicable. Our permits feature QR codes for easy border verification. For assistance, email us at license@eswatinitv.co.za or call our help desk. Apply before your shipment arrives. Ensure compliance and avoid delays. Remember, all TV sets and decoders entering the Kingdom of Eswatini must have a valid ESTVA import permit. Thank you. Act now.
In the interest of our very limited time, Sondzela Sikhulume is going to take us through the numbers now. Sondzela Sikhulume, just briefly take us through, what the numbers are telling us today. Thank you.
Thank you, Mr. Ngumalo. Good afternoon to you, and also good afternoon to the viewers. So overall, the numbers are looking relatively good, just at the background or backdrop of that cooling U.S. inflation. And also remember that earlier on last week when we saw that non-farm payroll data came in, it came in a bit cooler. So now that took away the urge around the interest rate. So now there is a high expectation that we expect the Feds to hold the interest rates in their next meeting. So we saw that, pulling up the Nasdaq Composite Index, 143 points, and the S&P 500 also up 20.3 points in today's trade, while the Dow Jones Industrial Average is just down 21.58 points. Now, that's because this pulling of the inflation rate also comes alongside of a renewed or reignited hope around AI stocks. So we're seeing the techs doing relatively well there. Coming into Europe, we're seeing London, just down a bit, 33 points in today's trade. Now that's because we're seeing a bit of some cooling in the US, in the UK's GDP growth over the past month, and now that somehow took away some of that momentum that we are seeing coming through from Wall Street. But coming into countries like Germany, we can see Frankfurt is up 143 points in today's trade, and the CAC 40 is up 17 points in today's trade. Now that's due to that cooling US inflation, and also there's a bit of a glimmer of hope around the reopening of the Strait of Hormuz, which is also quite visible in the price of oil today. And then coming into Asia, we're seeing Asia just taking a note off of that, U.S. cooling inflation data and that recognition around tech stocks. But we're seeing that the mainland really is not doing well around those. So Japan is up 784 points in today's trade, while the Hang Seng in Hong Kong is down 43 points, and the Shanghai Composite Index is down 19 points. Now that's because of those domestic fragilities and weaknesses within the mainland's economy. South Africa is down 692 points in today's trade, given a lackluster performance of the miners. Eswatini remains relatively stable in today's trade. Gold is down a bit, 21.4 points in today's trade due to profit taking. And we're also seeing the price of Brent crude also down a bit to $87.30 per barrel. And that's given those peace talks that are still ongoing there. Overall, in terms of the currencies, we're seeing the Lilangeni at an old 5-time month high against the dollar trading at 16.13 and relatively stronger against the euro trading at 18.61 and also remaining relatively stronger, though showing signs of weaknesses against the Japanese yen trading at 9.87, given the fact that we are seeing renewed interest in emerging country currencies. Thank you, Mr. Ngumalo.
Mr. Spear, thank you for your time. Thank you for your valuable insights. Sondzela is our economist, and he has been sharing how he's decoded today's numbers from Wall Street. This marks the end of our program today. Enjoy the rest of your afternoon. We'll see you again next week, same time, same place. Goodbye.